Namaste, my dear friends. Now I am referring to you CMA Intermediate December 2024 question paper indirect taxation portion. Answers I am now going to be presenting here for a kind consideration. Referring as follows. Reading here question number 7. As per the GST law, renting of precincts of a religious place meant for general public, owned or managed by a charitable or religious trust under Section 12A of the Income Tax Act 1961 shall be exempt if A. Renting of rooms where per day charges less than 1000. B. Renting of shops or other space for business or commerce where charges per month are less than rupees 10,000. C. Renting of premises, community hall or open area where charges per day are less than 10,000. All the three are exempted. A, B, C are exempted. Therefore, the right answer is D. All the above is the right answer for the given question. Answer D. Further referring to my dear friends, question number 8. A hotel owner provides accommodation in Haryana through an electronic commerce operator. The hotel owner is not liable to get registered as per the provisions of Section 22, subsection 1 of the CGST Act because his aggregate turnover not exceeded threshold limit for registration. Who is the person liable to pay GST in this case? It is covering under the reverse charge mechanism, Section 9, subsection 5 of the CGST, where if a short-term accommodation supplier of service providing services through e-commerce operator liable to pay GST provided if the supplier, namely short-term accommodation supplier, is unregistered person. In the given problem, very clearly stated that the supplier is unregistered person supplying short-term accommodation services through e-commerce operator. They are liable to pay GST with the e-commerce operator. The right answer here is answer B. Is the right answer. Further, my dear friends, question number 9. The item which will be taxable both under the current central excise law and new GST even after the implementation of the GST. Only one product I said in the class also, tobacco products, where it attracts central excise duty followed by it attract GST on account of manufacture excise duty, on account of sale GST attract on this particular product. Namely, in the given case, the right answer here is C, my dear friends. Further referring question number 10. As per the GST law, tax invoice shall be prepared in dash in case of supply of goods and in dash in case of supply of services. Supply of goods, triplicate copies. Original for the buyer, duplicate for the transporter, triplicate for the seller. In the case of supply of services, duplicate copy. Original for recipient of service, duplicate for the supplier of service. So, is the way in which I also referred in the regular class. In the given case, here triplicate, here duplicate. Right answer here is C. The answer in the given case is C. Further, my dear friends, question number 11. As per the Customs Act 1962, goods which are same in all respects including physical quantity is known as identical goods. The first answer is the right answer, not required to refer the furthermore B, C, D. Therefore, A is the right answer. Question number 12. The maximum threshold limit for eligible under the composition scheme for supplier of service under Section 10, subsection 2, capital of the CGST Act is 50 lakhs. Aware of that, all India is 50 lakhs. So the right answer in the given case here is B. For the supplier of services. Is it clear? Further, my dear friends. Now reading as follows. Question number 13. Mr. Prasant works with ABC Limited as a senior manager since 1st April 2019. On 11th May 2023, the company gave him a cash gift of rupees 55,000 for his contribution in acquiring a new client. Which of the following statement is correct with reference to GST law? With reference to GST law. A. The gift received from the employer is fully exempt from GST. B. The gift received from employer is fully taxable under the GST and the amount exceeds rupees 50,000. It is the right answer. Where the gift in a financial year to an employee not exceed rupees 50,000 exempted. If exceed 50,000, entire value of the gift will attract the GST. So entire 55,000 rupees attract the GST. So right answer in the given case here is answer B. Point number C and point number D not required to refer. Further, my dear friends, question number 14. As per section 2, subsection 28 of the Customs Act 1962, Indian customs waters means the waters extended into the sea up to the limit of exclusive economic zone is the right answer in the given case. Answer A itself is the right answer, then not required to refer the BCDs. Further, question number 15. Mr. Nitesh, a composition dealer under the GST, exceeded the specific turnover to eligible for the composition scheme on 1st December 2023. Which of the following statement is correct in the given respect? A. He has to intimate the tax authorities and start paying the tax under the regular scheme from the first day of the next financial year, 1st April 2024. B. The permission granted to him is deemed to be withdrawn from the day his turnover crosses the specified limit and he shall be liable to pay tax under the regular scheme from that day itself. That is 1st December 2023 is right. The point number B is the right answer here. So why point number B is right answer here? Because he exceeded the threshold limit on 1st December 2023. With immediate effect should switch over to normal scheme from the date itself and intimate department within 7 days by informing by filing the form GST CMP 04, namely withdrawal of composition scheme. So in the given case, right answer is B. Further, my dear friends, now referring furthermore, question number 6 from our indirect taxation laws. Explain the concept and features of indirect taxation. It is one of the study material answer. Study material question it is. Concepts and features of indirect taxation is nothing but is a multi-point of levy tax, is a comprehensive nature of tax. It provides the input tax rate. It eliminates the cascade effect of tax. Is a regressive nature of tax. It is the burden on the recipient, the burden of the tax on one head, recipient of tax in other head, and it is administered supervised by the CBIC. Like that, you can say that the concept and features of the indirect taxation. Further referring, my dear friends, question number 6, subpoint B. Who are the members of the GST Council? State any 5 recommendations that can be made by the GST Council. Very simple, my dear. GST Council consists of Union Finance Minister as a chairperson, Union Minister of State of Finance is vice chairperson of the GST Council, and all the states nominating their finance ministers as the members or revenue ministers as their members, or any state can be nominate any of their minister as a member of the GST Council. What are the recommendations? The 5 recommendations. 1. Tax rates increasing or decreasing can be recommended by the GST Council. Granting of exemption, not granting of the exemption can be recommended by the GST Council. GST Council also recommends threshold limit for registration, threshold limit for composition scheme, decreasing that particular composition scheme. Further, the GST Council providing dispute resolution solutions between the states while implementing the GST. 5th point, GST Council recommends modifications and updations from time to time in the rules and notifications. Based on their recommendation, the government is going to issue the notifications to implement the amended provisions by inserting the what we can call rules and notifications. Now reading as question number 7. In that small a, state with reasons the person liable to pay GST in each of the following independent cases where the supplier and the recipient both are located in the taxable territory. Ignore the aggregate turnover and exemption available if any. 1. Money Saved Bank Limited, located in Kolkata, appointed Ms. Sakshi as a recovery agent for collecting the outstanding balance amount of loan from its customers. Ms. Sakshi provides services to Money Saved Bank Limited for which bank paid commission of rupees 15,000. Whether your answer will be changed in case 1 above. If Ms. Sakshi provides recovery agent services to a dealer company instead of Money Saved Bank Limited. Here be clear, my dear friends. If recovery agent provide these services to a banking company or NBFC, it is taxable supply, no exemption in the hands of the recipient. Namely, RCM apply under section 9 subsection 3 of the CGST. In the first case, here RCM apply, liable to pay GST by Money Saved Bank Limited being a recipient, they are liable to pay GST. Is it clear? Further, if such a recovery agent provide these services to a car dealer which is not a banking company, which is not a financial institution, yes, our answer here different. Ms. Sakshi provide these services of recovery agent services to car dealer, attract the GST in the hands of the supplier. Ms. Sakshi is liable to pay GST. It is a forward charge. Further, my dear friends, coming to question number 7, small a, in that subpoint 2. Mr. Mohit has taken a loan from Dhawan Bank Limited, and for this he has taken a service of an individual, Mr. Prakash, who is a direct selling agent of Dhawan Bank Limited, and bank paid commission to Mr. Prakash for giving a customer to the bank at the rate of 1% of the loan granted to Mohit. Yes, here also RCM applies. Individual direct selling agent, that's the point. Individual direct selling agent. He is an individual direct selling agent to a banking company or NBFC, is also be under the reverse charge. The recipient liable to pay GST. Conditions: supplier should be individual direct selling agent, recipient should be a banking company, NBFC. In that case, it is reverse charge. RCM apply. Here in the given case, the Dhawan Bank Limited is liable to pay GST in the given case. Further, my dear friends, question number 7, point number B I am referring here. Subpoint B. Self and family life insurance company has collected premium from policy subscribers. It does not intimate the amount allocated for investment to subscribers of the policy at the time of supply of insurance services. The company has provided the following details in relation to its receipts for the month of May 2024. New policy subscribers premium collected 50 lakhs. Renewal premium credit 75 lakhs. Only risk cover premium policies, premium collected 30 lakhs. Single premium annuity policies, premium collected 95 lakhs. Life micro insurance policies as approved by the Insurance Regulatory and Development Authority, where insured amount does not exceed 2 lakh rupees. Premium collected rupees 10 lakhs. All the amounts are exclusive of the tax. You are required to compute the value of taxable supply of the services by self and family life insurance company in terms of the rule number 32, sub number 4 of the CGST rules by giving the necessary explanation for the treatment of various items. Very simple. When the problem very clearly says it does not intimate the amount collected from for the investment, is a risk plus saving, but how much is saving? Investment how much is not known. In that case, rule says that first year premium na 25%. In the given case here, if you refer, my dear sir, 25% of 50 lakhs. How much comes? 50 lakhs multiplied by the 25% is nothing but what? It is 12 lakh 50,000 is the value of taxable supply, isn't it? 12 lakh 50,000 is the value of taxable supply. Renewal premium subsequent year, second year and onwards, it is 12.5% as per the rule number 35, rule number 32, sub rule number 4. So on 75 lakhs, 12.5%, which is equal to 9 lakhs 37,500 is the taxable supply. Thereafter, only risk cover policies, entire 100% is the value of taxable supply. How much comes here? 30 lakhs. Coming to single premium annuity, which is talks about at the rate of 10%, 10% equal to value of taxable supply, only single one-time payment. Therefore, on 95 lakhs, 10% is equal to 9 lakh 50,000. Then coming to life micro insurance policies as provided by the Insurance Regulatory and Development Authority, where the sum should not exceed rupees 20,000. It is specifically, entire premium specifically exempt from the payment of the GST. Therefore, our taxable supply here, how much means? Our taxable supply here means 12 lakh 50,000 first case, 9 lakh 37,500, thereafter 30 lakhs, thereafter 9 lakh 50,000. Totally comes here is almost 61 lakh 37,500 is our total value of taxable supply in the given case. Got it, my dear friends? Further referred to here. Question number 8, reading as follows. Question number 8 in that subpoint A. Sham Limited is a registered manufacturer of cars. Sham Limited provides the following information of the GST paid and the purchases made or input services availed by it during the month of May 2024. So it is for the month of May 2024. Routine maintenance charges of cars manufactured by Sham Limited. How much here they given? 40,500. Fully ITC allowed, because car manufacturer, for him the servicing services will qualify for input tax credit. Therefore, it is ITC allowed. 40,000 ITC allowed. Further, my dear friends, 40,500 ITC allowed. First case. Point number 2. Capital goods. Out of 5 items, invoice for 1 item was missing and the GST paid on that item is 2,500. Total value 45,000. From the 45,000, what is missing invoice? ITC not allowed. Therefore, 42,500 only ITC allowed. Here ITC allowed. Further, my dear friends, point number 3. Inputs consisting of 4 equal lots, out of which 3 lots were received during the month of May 2024. But we cannot take the credit proportionately. We cannot take the credit part by part. Only when the last lot received. Last lot when received not given. 3 lots only received up to May 24. Therefore, last lot not received. When you receive the last lot, that time only you can avail the entire amount of ITC of rupees 65,000. So, for the month of May 24, this amount is ITC not allowed. ITC not allowed for this month of May 24. Further, point number 4. Travel benefit extended to employees on vacation under statutory obligation. That is important to note. If it is a statutory obligation, it is qualified for ITC. So, in the given case here, ITC 7,500 is well allowed, my dear friends. Further, my dear sir, point number 5. Purchase machinery for manufacturing process worth rupees 2 lakhs and claim depreciation under Income Tax Act on 2,36,000 inclusive of GST. Therefore, this is not qualify for ITC. If you claim the benefit of depreciation and Income Tax Act inclusive of GST, then don't ask input tax credit. So ITC in the given case not allowed. Entire amount of rupees 36,000 ITC is not allowed. Point number 6. Repair services for office building, cost of repair is charged to profit loss account. So this 48,000 though may be works contract service, it is not a capitalized nature. It is a revenue expenditure. Therefore, ITC well allowed. ITC allowed. What are the things ITC allowed here? ITC allowed 40,500, thereafter 42,500, thereafter 48,000. So total amount comes here how much? 40,500 plus 42,500, thereafter 7,500. This sum, this 7,500 is also ITC allowed. Thereafter the 48,000. Totally ITC here allowed here is sorry, ITC allowed rupees 1,38,500 is the answer for the given case. So ITC allowed here this 40,500 plus 42,500 out of 45,000, thereafter 7,500, thereafter the 48,000. Together 1,38,500. Is it clear? Further reference, my friends. Question number 8, subpoint B. Palak Trade Limited of Mumbai has imported a machine by air from UK. The details in this regard are as under. Price of the machine UK pound 10,000. Air freight, loading, unloading and handling charges associated with the delivery of the imported goods to the place of importation UK pound 2,000. Royalties relating to imported machine payable by buyer as a condition of sale UK pound 500. Designing and engineering charges paid by to consultancy firm in UK outside India UK pound 300. Insurance charges paid to the place of importation not known. Other information. Date of bill of entry 30th April 2024. Rate of BCD 10%. Exchange rate as notified by the CBIC 104 rupees per UK pound. Date of arrival of the aircraft 21st May 2024. Rate of BCD 20%. Exchange rate as notified by CBIC 103 rupees per UK pound. Social welfare such as 10%. Integrated tax payable under Section 3, subsection of the Customs Act, Tariff Act 1975, 12%. Ignore GST compensation cess and agricultural infrastructure development cess. You are required to compute the total custom duties and integrated tax payable by Palak Trade Limited under the Customs Act 1962 with appropriate working notes from the above information. Relevant legal provisions, legal reasonings should be form part of your answer. Very good. A good question it is, my dear friend. Very good. Little bit above the standard, little bit tough, but no problem. It's easy to handle. So here, so I will take here UK pounds. Here $10,000 machine value. Then royalties 500 add here. 500 UK pounds add it. Designing development outside India addable, which is 300. You will get 10,800 UK pounds, which is nothing but FOB of customs. FOB of customs. Then add to that, we have to add here the air freight. They given air freight, loading, unloading, handling charges associated with the delivery of the imported goods to the place of importation 2,000 UK pounds. Now here air freight, when you add air freight, that should not go beyond 20%. That means 10,800 into 20% is equal to how much? 10,800 UK pounds at the rate of 20%, which is 2,160 UK pounds, but actual is only 2000, whichever is less. So here I will say that air freight is $2,000. Then insurance, they said not known. When insurance not known, what we will do is at the rate of 1.125% on FOB value of customs. What is the FOB value of customs? Say 10,800 UK pounds. So on 10,800 UK pounds at the rate of 1.125%, how much comes here? 121.5 UK pounds. Now we got total here. Total how much? 10,800 pounds plus 2,000 pounds plus 121.50 pounds, which is almost all 12,921.50 UK pounds. This we have to convert into Indian rupees. Here they given Indian rupees. Which exchange rate we have to consider? Only the exchange rate of the CBIC at the time of submission of bill of entry. What rate here is 104. So 12,921.50 UK pounds multiply with the 104 rupees. So we will get the here CIF value, namely assembly value, which is nothing but how much in Indian rupees into 104 rupees multiply, we get here 13,43,836 you will get, isn't it? Then add to that basic custom duty. Basic custom duty if you refer here BCD. What rate is applicable BCD? The bill of entry date 30th April or arrival of date of arrival of aircraft, namely reach to Indian customs. Whichever date is happen to happen later. Which is the later? 21st May 24 is later. In that case, BCD what rate? 20%. That is applicable. 20% BCD on this particular value is equal to how much comes here? 2,68,767. Then add social welfare surcharge, which is always 10% on BCD. On BCD 26,877. Round off to nearest 1 rupee, 50% above. Therefore, nearest 1 rupee round off. Then you got a value here. Here how much? 13,43,836 plus 2,68,767 plus 26,877. So you will get here 16,39,480 is the value for appropriate for the IGST. So IGST rate is given here. What rate? 12%. So 12% the enter value is how much? 12% is equal to 1,96,738 because 60 paise is there, round off next to 1 rupee. So total value 16,39,480 plus 1,96,738. So you got here 18,36,218 is your land value. So is the BCD, is the social welfare surcharge, is the IGST value. So we got it, all the points we have been covered in the given case. That's it. With this, question paper is completed. Got the clarity? Very simple, my dear. Nothing is there. Only thing is how to apply applications. So hopefully all the best for your exam result. Bless you. All of them should come to final. Thank you, my dear friends. Thank you to one and all.